I'm a big believer in you have to be engaged and start pushing buttons and learn from that.
What's up, traders? Welcome back to part 2 of the series I'm doing with Michael Tama on risk management. And as I said last week, there's a couple of videos. This is only the second one. There's a lot more to come. And last week we talked about risk. If you didn't watch the video, go watch it. It's going to be linked below and here in the corner. Now for this week, we'll talk about something different, which is strategies. Now Michael doesn't always talk about strategies, but he likes the topic anyway. And there's a lot to cover in that. He's been doing a lot of different things in the past. A lot that I actually have to learn from him. And next week, we'll talk about backtesting, which is going to be very, very nice. So let's jump right into this one. I'm super excited. And I'll catch you back here at the end. And you want to talk about also strategies that we can use in Forex. I know you're good at that to trade Forex now with futures. But what would be for someone starting out, or maybe someone kind of mid-experience? Things that they can look into, like are there things you should research more than others into Forex? What are your thoughts on this? And I was just going to hear from people, but for your case, what would be your thoughts on that topic?
Well, I know someone who has a pretty good Bollinger Band strategy, so you could start there if you're interested. Make sure the support resistance, of course. So, but I kind of take a different step. I'm a futures trader by nature, and I do a lot of options writing and premium collection, and I like that sort of theta decay, which is kind of like a cup of ice that keeps melting every day. So even when I'm wrong or nothing happens, I'm still kind of taking in income. But for Forex, I tend to use a lot of the Forex, futures products. The symbols like the E micro, the euro, which is like $1.25 a tick. It's 1/10 the size. You get stopped out at 50 pips, and you're down like $60. It's a great learning tool, and also keeps you engaged in Forex. And obviously, probably the most liquid, liquid products that are out there. There's the Japanese yen, this 6C, 6J. 6C is a Canadian dollar, Australian. I even trade, believe it or not, now the Mexican peso, which has been pretty volatile. 2 years ago, and we talked about this, I really never touched Forex. So it's great opportunities to get involved in the Forex market, and they're actually, been pretty active of the past year or two. But also, again, getting back to risk management, they're low notionals. They have very low defined risk, if you want. So, that's where I step in and say, I want to marry good products with strategy, but again, have the ability to manage risk, even for small accounts. I kind of help a lot of people with like those small accounts trying to get their feet wet. I think they're great. Also, even the ETFs, I'll trade options on them. UUP is the dollar, FXY, FXE. These are really good products with decent volume and liquidity. So again, it may be an alternative. One thing I'll end on this note though, Etienne, if we're trading, say we trade the same strategy, say Bollinger Bands, for example, and you're using your Forex, platform, and I'm using futures, we will have the same result. May not be the same dollar result, but I mean, the chart is the chart. So, if we have the same stops and things like that, we will have the same sort of outcome. So, product indifference, it's something that maybe, people start looking at. I love the low notional and the risk on it too. So.
I was told a few months back by different traders, like pretty big traders, to kind of move from Forex to futures in terms of like just pretty much doing the same thing, but moving from the Forex spot to futures. Are there any kind of benefits of that, in your opinion? What would be better or not better doing that?
Well, you can add more reward without sort of adding size, but futures are going to be much more volatile. The tick size is going to be higher. I wouldn't recommend it for small accounts. So there's a lot of reasons why I wouldn't recommend futures, especially for newer traders. You really want to have graduated and seen, success for say 6-9 months or whatever, however you define. As a risk manager, I'll define the success for you, but you have a really good solid track record. You can consider that. I love the liquidity in some of these things. So, you're not getting that bid-ask spread and things like that. There's a lot of things that kind of irk me with some of the traditional Forex stuff. But I'll go back to the E-micro. I mean, you have a Euro USD product that has $1.25 a tick. I mean, if you want to get started in futures, that's where to go. You could even do that with a relatively small account, and you can kick the tires. And if you feel it's not working out, it's going to be real hard to blow your account. I mean, and most platforms now, like, and again, I use, risk controls. I'll use technological risk controls. Is, you automatically have stop out. You have a daily loss limit, and then the platform just shuts you off. Technological risk management is the best thing that's happened to my business in the last 3 or 4 years. So, but again, for futures, try the eMicro. It's ask your broker if they have it. It's just fantastic.
Nice. And when people want to get started with like creating a strategy for that market or for futures or Forex, what do you think they should start? Should they start like reading books, talking to people? And how should they combine things that they have something solid, in your opinion?
This is such an opportunity for a shameless plug, but I won't do it. So, but honestly, the books, it's 50-50 there. I like talking to people. I know, I'm preaching to the choir here. Just meeting with other traders. We talk about the meetups that we attend to. You attend the ones in Montreal. I love going to traders expos, and I'm going to the one in Vegas in November. I come back with such a wealth of knowledge, and just meeting traders. Maybe if I learn a few things here and there, I'm always learning. But to me, I get engaged. I really get pumped up. This business sometimes becomes very mechanical. My strategies are very mechanical. I'm somewhat of a robot. I'm paid to be a robot. But, there's a human being somewhere inside of me. So, I like meeting people, getting engaged. You get good feedback on my writings and stuff. That kind of gives you a purpose in this business. Because, I don't know, for me, it's interesting. But at the end of the day, it's clicking a button. And I want my legacy to maybe be a little more than just clicking a button. But I would suggest, in summary, to answer your question, I think there's nothing more valuable, leveraged value than meeting with people. Especially if you go to a meetup with, say, 30, 40 people. I mean, it's incredible. And, as professionals like us, Etienne, and teachers, we love it too. I mean, I think we get more out of it than some of the other people as well.
Yeah, it's just crazy the amount of value you get from just talking to people. And it's not about the lessons, because I think you get the same sometimes online or in a book than like what a person would say. But I think it's like maybe it's like the feeling with it or the environment you get it in that kind of makes it better, I feel. So it's really powerful. And when you decide to trade something new, like you talked about, so let's say going into futures or Forex, what kind of work you have to do before that to make sure that you are good to go into it?
That's a good question. I try to be very conservative and start out with a plan, and you grow and you develop. By all means, you want to do that. But I'm a big believer in you have to be engaged and start pushing buttons and learn from that. That doesn't mean you have to risk capital. I mean, there's great platforms with simulation and things like that. But really, when I start teaching someone, probably within the second or third day, I'm already engaging them in trades, because I just feel like you have to have those occurrences. It's just like anything in life. The more you do something, the better you get at it. And again, it doesn't mean risking capital. Once you get to a level where you're just comfortable with the trades, the strategies that you've learned, obviously you want to. I call this, and we've talked about this before, the graduation plan, where you start in sim, and you really have to earn the right to start going live, and then increasing your whether your number of shares, contracts, or pips. You have to earn that right, and there's two ways to earn that right. One, by performance, all right, over a relatively long period of time. But at the same time, were you compliant in your trading plan during that time? So you can get really lucky and maybe move your stops and things like that, and you've reached your profit goals or win-loss goals. But if you're not compliant, to me, if I'm your coach, you're not moving on to the next step, because that's eventually going to kill you. So I kind of like to have everybody start slow, but I've learned in my teaching to really get them engaged and also let them learn about the platform errors. I still do it today. I want to close a position and then I added. I'm like, how am I keep doing this? So you're going to make a lot of mistakes. So take it from there. But again, it's like anything in life. Just you build, but rinse, wash, repeat, and get to the level where you're comfortable, and then you can start playing for real, playing for fun.
Mm-hmm. How do you react when you make a mistake in your trading now?
You know how it is. There's a 90% success rate that trade will fail. Every time you make a mistake, the market doesn't kind of balance and give you a break even. It just seems to if you want to know my best trade strategy, I'll let you know when I make a mistake, and then take it the other way. It's just nature. It's human nature in this business. You never gives you a free pass. And really, when you think about it, it's a 50-50 shot that it will give you a free pass, but it never does. I think the first thing, and I'll kind of use more of a structural risk management thing, identify. So you identify that you make a mistake. A lot of times people don't realize that. You identify. I'm more apt to, a lot of people say, close the trade just immediately. I kind of do a quick assessment because there may be something there that kind of lets me to believe it. I'll obviously put risk parameters on, but I'm going to kind of let that thing work, but recognize the fact that it's a mistake. It's okay. I have a little buffer in my compliance, in my trading plan, like 95%. So, you're talking about 5 trades out of 100. You're going to have those fat finger mistakes, things like that. But I also encourage, a lot of the traders to really optimize your platform controls. So, if I do make a mistake, but I have a lock limit of, say, I don't know, a certain dollar amount for the day, well, it's gonna lock me out. So I have technology kind of helping me in my risk management side, so it limits my mistakes. I'll also, obviously keep them in the journal. Everything you do is in your journal, and then, what type of mistakes were they? Assess them at the end of the period. Were they fat finger? Could they be resolved technologically? Was I not thinking? Or did I go against my plan? A lot of these mistakes, quote unquote, really are just non-compliant trades, which is obviously something you want to track or have your coach over-assess.
Yeah. And I love that principle of having the 95% compliance level. So 95% of the time you're compliant to your plan, you do things right. And I think I heard this first from you and Van Tarp. Now, the question is, when you see that you have like below 95%, so let's say you are at 70% compliance level, what are some of the action steps you can put in place to get to 95%?
Yeah, well, again, it's, I'm a big believer, and I know you are too, about plan, trade journal reviews, things like that. If you're at 70%, and that's fine. First of all, this business isn't easy, and it just finds a way to kind of stab you in the back when you make mistakes. So identifying the fact that you made the mistake, I'm not going to discredit that. I'm going to commend that. And what's the action plan in your trading plan to get, to a high level? And most of the time what mistakes is, don't touch the stove more than once because it was hot before. So don't touch it again. A lot of it's, don't do that again. But again, can we improve it with technological controls? When do I recognize the mistake? A lot of I see when I do trade journal audits, a lot of the mistakes are really, they document them as mistakes, but they're really trade plan violations. And for me, that's a red flag, and that has to improve. And again, that's where I think, coaching is good for strategy. Obviously, it helps bring in P&L, but I think to have a coach is really to help in those areas. Get that error rate up to 90, 95%. By the way, when I say 95%, I consider that sort of a professional level. Like I'm accountable for, when I trade my accounts or accounts for others, I'm sort of saying 95%, but those 5 better be mistakes. Those aren't trade journal violations. That's kind of a separate compliance thing where, you should be doing this and you do it. That's a different discussion with a whip, so to speak. So, and most errors can be, corrected, and it's just improved over time, repetition. But having oversight, such as a coach, really helps in that regard.
Yeah, and sometimes we have ways to improve, like we don't even see it ourselves. We can have to have other people to tell us what to do, what to improve.
Yeah, and then that comes back to what we talked about, engagement. I want to see the person, the trader, spending those Saturday and Sunday mornings reviewing performance journals, doing back testing, and personally, and I know you do a lot of coaching, I don't see a lot of that. And it's like anything in life. You get what you give. And if this business was so easy, everybody would be doing it. You just push the button, have bill dollars coming out of your computer. Why not? But it's not. It's really, really hard. That's why the failure rate is so hard. And really it comes down to, and I watch a lot of your videos, a lot of the people that say it's just about putting in the time. And maybe technology is kind of an excuse for people not to put in as much time, but maybe after watching this they'll realize that it's a pretty cool profession, very rewarding, but you do have to put the effort in.
And that was it, guys, for this second episode. I hope you liked it. Comment below what you thought. As always, leave your question below. Michael and I will answer. Make sure you stay tuned for next week. There's also a playlist that's going to be linked below with all the videos. Again, the quality is not that nice once again for this one. I apologize, but we'll make this right for the next interview. Click the subscribe button and click the bell next to it also if you want to be notified of future videos. And with that being said, I'll catch you back here tomorrow. Ciao.